online or on your mobile. Thanks for joining me for Big Ideas. Hello, I'm Paul Barclay. Tonight, Bitcoin and the reinvention of money. Bitcoin arrived on the scene in 2009 during the global financial crisis, and there were great hopes it might offer a viable alternative to a mainstream financial system that was clearly struggling. 6 years later, Bitcoin has yet to gain acceptance as currency. It's been at the centre of a number of scandals and linked closely to the illicit drug trading site, the Silk Road. But despite all this, the idea behind Bitcoin is being taken very seriously by governments, Silicon Valley and the finance industry. So why the interest? Let's go now to Wall Street and the Museum of American Finance for Digital Gold, the inside story of Bitcoin. Your speaker is Nathaniel Popper, author and reporter with the New York Times, where he's covered the intersection between Wall Street and Silicon Valley. Here is Nathaniel Popper.
My book is really an effort to tell the story of this technology, and I think hopefully I'll bring this home. I mean, this is the number of incredible personalities that have kind of driven the development of Bitcoin is pretty remarkable, the number of sort of movie-made moments. And I focused on the story because I think that, you know, it's hard to get into this by talking about starting with the technology, which is some pretty complicated stuff. But when you understand the people and their motivations and why they threw themselves into this, I think it provides a way to understand it. So I'm going to focus mostly on the people, but I do want to just start because I think defining what is Bitcoin is an important place to begin. And I think that one of the reasons people have trouble, with this technology is because it's actually many different things, and it's software that allows a lot of different types of financial transactions. Is it money? Is it a commodity? Is it a financial network? And so I think people don't always know where to begin with it. I like to start by thinking about it in the way that the people who were working on the projects that led into Bitcoin thought about it. Going back to the 90s, there were, and even the 80s, there was a group of privacy activists gathered roughly under the online community, the cypherpunks. These were privacy activists who essentially wanted to create digital cash. I mean, that was what gave the push to a lot of this. Digital cash in the physical world is this thing that that allows for direct transactions with somebody. You give somebody a $20, you don't need anybody else to facilitate that transaction. You give it to them, it's over, nobody knows the transaction happened. All those elements of physical cash did not make the jump into the digital world. Once money entered the digital world, you essentially always needed some middleman there to facilitate the transaction, to update the records on both sides. And so the privacy activists were worried about this because that middleman always had that window into your transactions. They knew who you were giving money to, where you were, when you spent the money. I mean, your credit card records are a pretty good record of your life, I think is what the privacy activists realized, and that's still the case. And so they were hoping to create digital cash that would make it harder for that sort of kind of big brother snooping. And so there were a lot of projects in the 90s, 2000s, trying to create digital cash. Most of them failed. And it was Bitcoin, which was originally introduced in 2008. The software was released in 2009. That kind of, I think for the first time, brought that idea into being, this digital cash notion. Now, I don't think that digital cash is necessarily the best way to think about Bitcoin now. I don't think that's its main function right now, but it's useful to realize that was what the folks involved in this project for many years were trying to create. Bitcoin itself, that software, I think the easiest way to think about it, in addition to cash, this digital token, you have a whole network that essentially allows for a sort of email for money. With email, as you guys know, the basis of it is your address and your password. Similarly, with Bitcoin, the kind of foundation of the whole system is your Bitcoin address, which this is one example of a Bitcoin address. This is actually one of my Bitcoin addresses. They're generally 34 digits long, letters and numbers. And it's roughly, you can think about it as an email address. You can use this address to send money, you can use it to receive money. And like email, you have a private key that is associated with each Bitcoin address. This is the private key that is actually associated with the Bitcoin address you just saw. Every address has its own private key, and you can think of this as an email password. And not surprisingly, you use the private key to unlock the address and send money. So that's the kind of building block of the Bitcoin system, and I think it's helpful to think about it sort of like email. Previously, if you wanted to send money, you needed to go to your bank, you needed to use some third-party service. There's no such thing as a sort of universal money account where you can send money to anybody else. There is, you have your routing number and your checking account number, which serves something like this, but that doesn't work internationally, and you're not always going to be able to transfer between banks. The idea with Bitcoin is that this address is a sort of universal address for money that allows money to be sent anywhere. So we're already diving into some of the complications, and I don't want to lose you this soon in it, but I think this is a helpful way just to start thinking about what it is. It was imagined as digital cash, and it's created this system that allows for a sort of email for money. So let's go back to 2008, 2009, which is when this thing burst onto the scene, or rather crawled very quietly onto the scene. The idea for the software was released on a sort of obscure mailing list, cryptography mailing list, by someone going by the name Satoshi Nakamoto. And a few months after describing the system, the Satoshi Nakamoto released the software that made this possible. And it became clear pretty quickly that Satoshi Nakamoto was probably not the name of a real person, that this was probably a pseudonym. He had a bunch of different email addresses, satoshi@gmx.com, and Satoshi would email with some of the other early people who got interested in this, and but never talked to them on the phone, never met anybody in person. And what was clear from Satoshi's early writing was that Satoshi was interested in this broader project, this 20-year project to create digital cash. And this was given a new urgency in the wake of the financial crisis, because obviously you had a world that had just witnessed a breakup that affected everyone due to the kind of institutions that we have traditionally entrusted with managing our money, the central banks and Wall Street. And the paper describing Bitcoin actually was released a few weeks after Lehman Brothers went bankrupt. And the paper releasing Bitcoin talked about the need to find an alternative to this financial institution that we've relied on for so long. Now, I want to hit on a few of the kind of highlights of this story after Satoshi released it into the world. During the first 2 years, the story of this technology really was that it was kind of constantly on the verge of death. It was being used by 5, 10, maybe 20 people. This Bitcoin software was being downloaded by people, and those people who joined into the network, and we can get into this more if anybody wants to, were getting the new Bitcoins as they were being released. The system was set up so that ultimately 21 million Bitcoins would be released in a very steady schedule, about every 10 minutes. And they would be released to, the system was set up so that they would be released to the people who joined the network. And so that was supposed to serve as an incentive to get people using Bitcoin, downloading the Bitcoin software. And you had a couple of people who did this. They looked at the software and they thought, this is going to be the next global reserve currency. This is going to be the next digital gold. I'm going to join this. I'm going to start collecting Bitcoins, and someday they're going to be worth $1 million each. And it all seemed very far-fetched, and they laughed at themselves, and it seemed very silly. And quite frankly, for a long time, it didn't go anywhere. The Bitcoins were being released to the people, and they didn't know what to do with them. They sat on their hard drives, and they would send them around to each other, but you couldn't buy anything with them. They were essentially useless, and so a lot of the early people dropped out. And I think one of the interesting, the characters early on who's most fascinating is a Finnish kid named Marty Malmi. I think he was 20 at the time, if I'm not mistaken. And I think probably if it wasn't for Marty Malmi, Bitcoin may not have survived those first 2 years. Basically, when he discovered this was this kind of libertarian pirate party kid, a little anarchist, a little libertarian, going to school in Finland. And he discovered this just while he was, playing video games and drinking some weird energy drink and listening to heavy metal. And he discovered this and immediately wrote to Satoshi Nakamoto and volunteered to help out. This was 5-6 months into the project, and Bitcoins were worth essentially nothing. And Satoshi immediately wrote back to Marty and said, "This is great. I need your help. The first thing you can do is just keep your computer turned on. We need people who are actually on the network." At that point, there were so few people using it that there were times when nobody was on the network. And so if somebody else tried to join, there was no network. And so Satoshi's request was that Marty just keep his computer turned on so that the Bitcoin network actually existed. Over the next weeks, Marty had actually applied for a summer job, being a web developer, some intern. He didn't get it, and I like to say that because he didn't get it, he was able to work on the Bitcoin project, and over the next month, he kind of became the lead along with Satoshi and making the website more readable, sort of marketing it on Facebook. And it was because he didn't get that job that I think Bitcoin may have survived that summer, because Satoshi had somebody to work with on this. And so that sort of takes you actually clear on through the first basically year and a half, two of Bitcoin's existence. And it was kind of humming along, and it had a few hundred people using it. But again, even with Marty's help, there was still nothing to do with your Bitcoins once you got them. You could have them on your computer, but there was still this kind of basic existential question, which is, why should anybody want to own any of these things? And into this story enters Ross Ulbricht.
On RN or online at abc.net.au, you're with Big Ideas. And tonight our speaker is Nathaniel Popper, New York Times reporter and author of Digital Gold. Back to Wall Street and the Museum of American Finance to find out more about how Ross Ulbricht's illicit drug trading site, the Silk Road, helped move the Bitcoin story along. Here's Nathaniel Popper.
Ross Ulbricht is a kid from Texas in his 20s. He dropped out of grad school at Penn State, and he in early 2011 created the Silk Road, which is probably the most famous outgrowth of Bitcoin so far. But the Silk Road, when it was created in 2010, at that point, basically the only thing, there was a guy selling SpongeBob SquarePants stickers for Bitcoin, and there were a few people who'd offer you server space for Bitcoin. But other than that, there wasn't really anything you could do with them. Bitcoins were still worth, maybe 25 cents somebody would pay you for a Bitcoin, or 50 cents, because people were betting that at some point these were going to become useful. Ross Ulbricht, not under his own name, put up the Silk Road, which was essentially an eBay for all the things that you can't buy on eBay, as I like to describe it. The first product available was actually psychedelic mushrooms that Ross had been growing at a cabin near his house in Texas. But pretty soon, people from Amsterdam started putting drugs up there, available to anybody in the world. And what Ross saw was that Bitcoin could make this kind of market possible in a way that it wasn't possible before. Up till now, if you wanted to buy drugs online, you had to use PayPal or your credit card. And of course, as soon as you did that, the authorities would ask Visa for the records or PayPal for the records, and you'd be arrested within a day. With Bitcoin, all that the authorities would see was your Bitcoin address if they could find the transaction. And your identity was not tied to that address necessarily. You could tie it if you wanted to, but this and people could hold their own money. Nobody could come in and seize your money. You had your address and your private key, and you had your money. And the Silk Road over the next months grew faster than Ross Ulbricht could have ever anticipated. He actually was not an incredibly skilled programmer. He needed he called upon old friends who were programmers to try to help him keep the thing alive as it got attention. And in probably 4 or 5 months after Silk Road was created, Chuck Schumer caught wind of it because of an article on Gawker. And Chuck Schumer hosted a news conference in which he derided this new kind of marketplace and Bitcoin and said, you know, this is this tremendous evil. The Silk Road could not have asked for better marketing. In the days after Chuck Schumer had that press conference, something like 10,000 people were signing up for Silk Road a day. And what the Silk Road did, and I think this is sometimes people in the Bitcoin community want to ignore this today, but the Silk Road was really the first time that number one, you had something that you could do with Bitcoin. Now, maybe not everybody wants to buy marijuana and heroin online, but this was something you could actually spend your Bitcoins on, and you actually had a wide array of things that you could buy. It made it clear that Bitcoin worked. The goal with Bitcoin was to be able to send money around the world anonymously. Yes, that was further down the list. But people were sending hundreds of dollars to Amsterdam, to Australia, and it was going through every time. There were a lot of complaints with the sites. You know, sometimes the drugs didn't arrive as expected or weren't of the potency that people expected. But the money worked, and that was incredibly important, I think. And for the next basically year and a half, this was the main thing you could do with Bitcoins. You could of course send them around to friends. You could buy and sell them. But if you wanted to, you know, do something in the broader world with your Bitcoin, Silk Road made that possible. And really, for the next year and a half, I think was the main reason people were using Bitcoin. It also, because it got so much attention, drew people to look at this technology, people who weren't necessarily interested in drugs, but were fascinated by some kind of technology that could make this thing possible, that wasn't possible before. And that's another unappreciated element of the Silk Road, which is that it drew in lots of programmers and developers, guys who I met in the course of my reporting at Google, at Facebook, who saw one of these stories at the Silk Road and started looking at it and thinking, you know, if Bitcoin can do this, maybe it can do other things that aren't illegal but are potentially equally useful. So that stage of the Silk Road gave way to this rising interest in Silicon Valley among entrepreneurs who started thinking about all these other potential implications. I think a lot of those potential implications surrounded the ability of Silicon Valley to offer the services that the financial industry offers today. The financial industry, I think, is one of the biggest industries that hasn't really been fundamentally changed by technology. Now, that I know everybody, you know, uses online banking, ATMs. Obviously, all the computer records are kept online, but banking is still this industry in which you have these central institutions, banks, that are responsible for keeping everybody's records, keeping everybody's property, and you kind of have to go through that bank for everything. It hasn't been decentralized in the way that the media industry has, in the way that communications industry has. And so Silicon Valley, I think, particularly after the financial crisis, looked at Bitcoin and said, here's a way you can hold money, you can move money around, you can actually create money. Maybe this is Silicon Valley's opportunity to finally move in on all this Wall Street business that has kind of eluded us for so long. And I think this was part of a broader thinking in Silicon Valley about finance. And we've seen a lot of these developments, the asset managers like Wealthfront and Betterment that have tried to take some of that business that Wall Street has kept for so long, Venmo, the lending clubs of the world that are trying to decentralize lending. Bitcoin in some ways offered an even more revolutionary solution, even if it was at the time a much smaller thing and still viewed as this sort of token for online drug sales. And so that struggle between the kind of anarchist libertarians, Ross Ulbrichts of the world who were into Silk Road, and the Silicon Valley venture capitalists who were pushing this as this new technology has dominated a lot of the last 2 or 3 years. And into that dialogue, there's been this constant issue of these crises and scandals that have hit Bitcoin. I think the biggest one of these was the collapse of Mt. Gox, which was the largest Bitcoin exchange in the world. It was based in Tokyo. And when it went down last year, it had about $500 million worth of its customers' Bitcoins. And remarkably, we still don't know if those Bitcoins were stolen or lost. Remember, if you lose this private key in Bitcoin, you've lost access to the Bitcoins in that address. This isn't a bank. You can't go and recover your private key. You lose it, it's gone. And that has happened several times over the course of Bitcoin's history, that people have lost private keys worth literally millions of dollars. There's many fun, sad, scary stories floating around about the guy in the UK who threw out an old hard drive and with something like, he realized later, $8 million worth of Bitcoins on him, and he went to the dump and was sort of digging through it furiously trying to find this hard drive. There are a remarkable number of similar stories. People who during the early years collected Bitcoins and as the price went up, tried to recover them and were unable to. So this story of Silicon Valley getting into this and selling this idea has been crucial at, among other things, pushing the price of Bitcoin up. As people have gotten excited about this idea, they have purchased Bitcoins on the bet that Bitcoins will, in the future, be useful and be worth more than they are today. And there have been a lot of ways in which they've been sold, but that's been key in sort of driving these big price moves in Bitcoin that everybody has seen. Now, again, the sort of Mt. Goxes of the world and the scandals that have hit this have raised this question about basically oversight and security in a decentralized world. You'll remember I talked at the beginning that this is a network that's run by all the people who are using it. Their computers are sort of backing it up and supporting it. And you don't have a central authority to say, this guy is a thief, we need to close down his account. This guy is a hacker, we need to not grant him access. Anybody can have access to this. Anybody can run an exchange. Anybody can run a business. And obviously the danger that comes with that is that you get a lot of dark and shady characters and sometimes just incompetent characters who enter and who cause a lot of damage. And so, $500 million worth of Bitcoins lost last year by Mt. Gox. I talked to Argentine pensioners who'd put all their money into Bitcoin hoping it would hold its value better than the Argentine peso. And they kept it with Mt. Gox, and in the course of a day, they went from having retirement savings to having no retirement savings. So that's something you kind of have to think about when you have decentralized technology like this. That, of course, has led, I think, into the latest phase of Bitcoin, which is the regulators and the banks moving in. And on the regulatory side, the biggest name here has been Ben Lawsky, who's the top financial cop in New York, who actually just recently announced that he was stepping down from the Department of Financial Services in New York and moving on, I think, to his own consulting firm. But he has led the push to essentially create new rules for this technology. And it's interesting because if you remember back to the beginning, what gave rise to this was this desire to find an alternative to the current sort of government-sponsored financial system, or with central banks given the power to create money, and create an alternative to Wall Street. And what you have more recently is that so much of the development has actually been driven by government and Wall Street. And Lawsky has, the sort of center of his push has been to create this thing called the bit license, which is a new kind of sort of money transmitting license for Bitcoin firms that recognizes the kind of upstart nature of this. It's been interesting to watch after, going back to the Silk Road, after the head of the Silk Road, Ross Ulbricht, was arrested in October 2013, there was Senate hearings at which really the first kind of federal conversation about Bitcoin, and people weren't sure if the law enforcement and regulators were going to get up and say, this thing is just trouble and we need to do anything we can to outlaw it. Instead, a few weeks after Ross got arrested, the DOJ Secret Service got up and said, this is interesting technology that could have implications for the entire financial system. And yes, it can be used for misdeeds like the Silk Road, but it is potentially important technology. And so since then, you've had regulators looking at this, considering what kinds of rules need to be in place to prevent the sort of things like the collapse of Mt. Gox. Now, on the Wall Street front, I think I want to just go back to the beginning and talk about the different things that Bitcoin can be. I think a lot of the conversation is still about this idea of a kind of digital cash, perhaps digital gold, a place you can store your money online. One thing we didn't discuss, and that's sort of the next layer beneath the kind of email system that Bitcoin enables, is the ledger on which all of the Bitcoin transactions are stored. Now, every financial system relies on ledgers. Obviously, the bank keeps its ledgers of all of your accounts and what your balances are and what your transactions have been. The kind of revolutionary thing about Bitcoin, the way the ledger is kept within Bitcoin, is that it's not held and updated by one institution. It's updated by everybody in the system. So everybody has their own copy of the ledger of Bitcoin transactions that tells you how much each person owns and where the transactions occurred. And the idea is that if one person or one institution gets knocked out, their computer systems go down, that ledger of transactions is still there. And the power of the system comes in the number of people who are holding onto those records. Because if there are a lot of people holding onto the records and one person over here says, I grant myself 1,000 Bitcoins, everybody else says, no, we have the records, we can see, you don't have those 1,000 Bitcoins. And that's the kind of authority within the system. It is kept by this communally updated ledger. And just to give you a sense, this is one website, blockchain.info, on which you can look at this ledger and look at the transactions coming in. And just to give you a sense, this right here is the latest transactions. This was not right now. I think this was taken, I took this screenshot last week. But you can see, in the course of a minute, you had all of these transactions coming in. This one's for 4 Bitcoins. This one's for 11.6 Bitcoins. And you can click on any one of them. So this is one transaction. Go to it and see. That's the Bitcoin address that the money came from. This is the 2 addresses it's going to. And this is how much was sent. And you can find any transaction in Bitcoin's history on this ledger. This is one website that makes it easily accessible, but anybody has access to that. And so this idea of a decentralized ledger in which you keep track of everything, which within Bitcoin is called the blockchain. But this is what a lot of people are talking about now, particularly on Wall Street. I think the Wall Street banks, as they've been looking at this, have been less interested in holding money within Bitcoin and more interested in the potential opened up by this ledger. What if, instead of Visa keeping track of all the credit card transactions, we had a decentralized system in which we could keep track of it, and we didn't have to pay Visa 20 cents for every transaction that was made? And so recently you've seen Goldman Sachs made its first venture capital investment in a Bitcoin company. JP Morgan has sort of outwardly been quite negative about this, talked about the opportunities for money laundering. Jamie Dimon, the CEO at JP Morgan, has been particularly critical of Bitcoin. But within JP Morgan, there's actually a 25-person Bitcoin working group composed of executives across the country, across the company, and across the world, from credit cards to settlement and clearing, talking about how they might use this to update their own systems. And actually, just today, I was reading as I was coming up here, Santander, the British bank, just put out its own report talking about how the blockchain and the decentralized ledger might save banks something like $20 billion a year by 2022 or something like that. Just because when this is the idea of the internet applied to money. You're taking this system that had these central authorities that charged tolls, and you're decentralizing that system and making it, opening it up to competition. We can talk more about the possibilities there, but that's what a lot of the conversation is around today, is the blockchain. Just finish up by saying, today, actually the price of Bitcoin oddly is spiking today. So it's gone from like $235 a Bitcoin to something like $250 a Bitcoin, I'm sure in anticipation of my talk here. And I think there's always these questions about, okay, is it settling down, or are people finally taking it seriously? I just close by noting that this is still an entirely sort of speculative realm. Aside from the Silk Road, there is currently no widespread use case of Bitcoin that people are currently making use of. There are banks talking about how they're going to use the blockchain to, change the stock market, but that's a long ways off. There are people talking about how they're going to use it for remittances, allow people to send money from the U.S. to Mexico more cheaply. Within Argentina, a lot of people are playing with this because of how screwed up the economy is there, but it has not gained a real foothold in the mainstream. And the price of Bitcoin is really just a sort of speculative bet on how useful this thing is going to be in the future. And it's not clear. It's not clear how it's going to be used. Is it going to be the global reserve currency, as some people thought early on? Is it just going to be a way you can store money online, sort of like gold is if you want another asset? Is it going to be a new credit card network? Or is it going to be supplanted entirely by another similar currency that does all of these same things better? But that's still very much an open question. I think, though, that looking at the people, as I did, these first 5 years, and looking at what motivated people to sort of throw themselves into this, I think one of the amazing things that kind of motivated me to write this book was seeing how many people were drawn to this in an almost primal way. People who really did sort of leave their old jobs behind to chase the promise of this. And there's a gold rush element to it, kids just looking to get rich. But I think this idea of freeing money, making it, creating this money that you own yourself, it kind of tapped into something very deep in people. And I think that's still playing out, and you see this in every conversation. So let's. I want to take some questions from you guys, but hope that gives you a good place to start talking about this. Please, I'm happy to answer any questions you guys might have.
Nathaniel Popper, New York Times reporter and author of Digital Gold. On Big Ideas on RN or online at abc.net.au. Let's go back to New York and the Museum of American Finance for the Q&A session. Unfortunately, the mic didn't pick up a lot of the questions, so I'll paraphrase some of them. The first question was about Bitcoin and the shared ledger system. So how did the failure of Mt. Gox happen? The whole idea of Bitcoin is that it wasn't supposed to be a centralised system.
So that's been one of the most fascinating things to watch in Bitcoin, which is that Bitcoin, you remember, supposedly gives you control over your money. You have your private key, and you have your account, and thus you have control over your money. What we've learned through Bitcoin is that people don't actually want control of their own money. As soon as they get control of their own money, they basically want to entrust it to some institution to look after for them. And so that's what people did with Mt. Gox. They basically sent their money to Mt. Gox, which was essentially a bank for Bitcoin. I mean, it was a Bitcoin exchange where you could buy and sell Bitcoin, but a lot of people just kept their money with Mt. Gox. And once they gave their money to Mt. Gox, they had no control over it anymore. I mean, they could log into the site and Mt. Gox would give them access to that money if things were working well. But in fact, Mt. Gox was holding those coins in their own accounts. And so then if Mt. Gox lost its private key or lost access to those accounts or had its private key hacked and lost the money, that money was gone and the person had no access to it. So essentially, Mt. Gox became this centralized institution within Bitcoin. So it's this kind of circle where it points again to the danger of centralized institutions. You trust a centralized institution, they can lose all your money. That's why Bitcoin came into existence in the first place. But when Bitcoin came into existence, people wanted to just give their money back to another centralized institution. And so it's been one of the great sort of ironies of Bitcoin that this thing that it was designed to allow, very few people have seemed to actually want that ability. And that's what happened with Mt. Gox, and that's why Mt. Gox was in a position to lose all that money.
Is there a tension between the big Bitcoin miners, who as a business want to cash in on their investment, versus the Bitcoin purists, who want to see the decentralised democratic model continue?
Well, you've hit on you've gone straight to the core of a lot of the kind of technical debates that are happening within the Bitcoin world right now. I think perhaps one of the biggest ones is the centralization of the people who are actually getting the coins. You remember I said, you get the coins by downloading the software. It's a very complicated process, but it's actually easiest to think of it as a sort of lottery. And the more guesses you take, the more chances you have of winning the new Bitcoins as they're released. And so you need very powerful computers to take a lot of guesses. And it's essentially impossible for anybody to do that with their home computer. And so you have these companies that have created these specialized chips. They put them in specialized data centers with mineral oil immersion cooling because the chips heat up so fast. They're putting them in Iceland because the energy is cheap there. China actually is now doing a lot of the mining because of the corruption there. You can get basically free electricity. And so you have a few players who are getting a lot of the new Bitcoins, and it raises this question: I thought this was supposed to be decentralized. I thought the rewards were supposed to go to everyone, and instead they're going to a few parties. And that's a real philosophical debate. I mean, there is this. This gets into so many of the sort of more complicated questions surrounding Bitcoin, but the more people you have using the system, the more secure the system is, because the more people you have to say, some interloper comes in and say, oh, I have 1,000 Bitcoins on my ledger, everybody else can say, no, you don't. And if the Chinese come in and a lot of them say, oh, we all have 1,000 Bitcoins, and they appear to be a majority, the bigger the network is, the harder it is to get that majority and claim that you have Bitcoins that you don't have, essentially. So you want a powerful network, and the power on the network is rising incredibly quickly. And there is this question, this philosophical question of whether it's going against the original idea of having a decentralized network. But the point for now, at least, is that still anybody can enter into this race. The fastest win it, and the people who can get the cheapest electricity and the fastest chips win it. But it is still essentially open to anybody. There aren't regulatory barriers to entering. There's just, financial and hardware resource barriers to entering. But it's a tough question, and I think it's one of these philosophical questions that comes up, like this issue of, do people actually want to hold their own money? And do decentralized technologies inevitably evolve towards centralized technologies? Napster was allegedly, ostensibly, this great revolution in the music industry, but where have we ended up? Now we have iTunes instead of Universal. Sometimes these decentralized technologies end up disrupting things, but just making way for another central player to come in.
On the policy and licensing points that you mentioned, have any authorities moved toward the notion of legal tender for Bitcoins?
There have been a number of countries that have made kind of their own decisions about this that go in different directions. I think Germany has said it's legal to use this as private tender, if I remember the language correctly. Actually, Ecuador has recently said it's illegal to use Bitcoin, but we want to move our own currency onto a distributed ledger. And so they're talking about moving their legal tender onto a ledger like this. But there is this debate about what is it? Is it a currency? And I think right now maybe because people are realizing this isn't really that's not the thing it's competing to be. Maybe that's not such an issue. Actually, China did say, I think they defined it as a digital commodity, and so they said it's not a currency, and so you can't use it like a currency, but you can trade it like a digital commodity. So these definitional questions are coming up, but again, it's kind of, I think a lot of people are recognizing that it's not quite, currency isn't the best way to think about it currently. Yes?
Two quick questions. One, when it comes to Silk Road, it's easy to understand whether buyers would want to use it. But initially, have you had any insight as to why the sellers of the drugs and such would use it when it assumes that what they would want to do with the money wouldn't accept Bitcoins? And secondly, that 21 million, I think you said was the upper limit.
Right.
How many Bitcoins have been created so far on that?
I think we're around 14 million into the 21 million. Actually, that site I showed you, blockchain.info, if you go to it, it has every stat about the network you could ever want, and that's kept track of on a rolling basis. Easy number to find. The number of new Bitcoins released every 10 minutes or so has started at 50 Bitcoins initially, and then after 4 years it went to 25. So we're at 25 now. Next year I think it'll go to 12 and a half, then to 6. So it kind of has this asymptotic quality to it. The first question you asked about why did the people selling the drugs want to accept Bitcoin, the thing you're hinting at is that once they get the Bitcoins, it's actually hard to cash out, and that was a real issue for dealers on the Silk Road. But they came up with a large number of ways of doing that. And in fact, Mt. Gox was widely known as holding accounts of many Silk Road dealers. And so you'd have your money with Silk Road, with Mt. Gox, I'm sorry. That's one of the reasons people would keep their money with Mt. Gox. And then they could sell on Mt. Gox for dollars or euros and get those euros. Everybody knew that was dangerous, so they also worked on other ways of getting it out. People would just meet in person. There's a site called Local Bitcoins where you can arrange to meet people at a cafe and just give them cash. They give you the Bitcoins. It's not recorded anywhere. New York has I don't know, when I last looked at it, there were 600 people offering in New York to meet up and do that. So people did that. Why they wanted to do it? I mean, it expands your market, right? I mean, the sellers had their market in Amsterdam. Suddenly they could sell heroin to anybody, anywhere in the world. So that was attractive enough, I think, to lure them on.
On Big Ideas, I'm Paul Barclay, and I'm paraphrasing a few questions to Nathaniel Popper, author of Digital Gold, The Inside Story of Bitcoin. The next question made the observation that it seems like Bitcoin enthusiasts are a long way from achieving their original goals.
There is that debate, that it has become exactly the thing that it was not supposed to be, that you have even more centralization of wealth than you did in the old system. It's like that's a whole night's conversation that, you go to a Bitcoin conference, you say that, you'd be there for the rest of the night. One of the fun things about Bitcoin I've found is that people who are in this community are very willing to kind of go back to those fundamentals and sort of think about, okay, why are we here? What is money? And, willing to debate that. And that's one of the reasons it was so fun to report this book, because there's a lot of dogmatism in this world. In this Bitcoin world, you go on the Reddit communities of Bitcoin and you see people just insulting each other and flame wars. But there is a great also willingness to sort of rethink some of the basics of so what is money again? Why do we value the dollar? Why do we move away from gold? And that's I think that's part of what's so fun about Bitcoin, is just that opportunity to sort of rethink, why does the system work as it does now? Maybe this isn't the best alternative, but how do you get to a system that distributes power maybe more effectively or more democratically? And I don't have an answer to that, but I think that's one of the great things that Bitcoin has done, is it sort of started this conversation again. Yes.
Tell me about the algorithm that creates new bitcoins. How many? How often? How does that work?
So that's what I was just mentioning. That basically every 10 minutes, new bitcoins are released into the system.
Why?
What?
Who picked 10 minutes?
Satoshi Nakamoto, the creator of the system. Basically, the software, when it was originally released, the software, like all software, was just a set of rules. And everybody who downloaded it said, I'm going to play by these rules. And among the rules were, there are going to be ultimately 21 million released. And they will be released about every 10 minutes. If it gets too easy and people are winning the lottery too frequently, it'll get a little harder. And it'll get closer to 10 minutes again. And there are rules about how that game would be played. And the reason that they were distributed that way was to serve as an incentive to get people to join. If you join, you can win some of these coins. And that's the new coin creation is over. And basically, at that point, the idea is Bitcoin will be entrenched enough that you'll be able to collect transaction fees. So obviously this sounds a lot like maybe moving back towards Visa, but the idea is you'll have a decentralized transaction network, so you won't have to rely on any one party. Everybody will be competing, and if somebody starts charging too much or gaining a monopoly, somebody else will come in. But as going to the question he asked earlier, obviously there's become a sort of oligopoly among miners now. So again, you're sort of getting back to the old system. But that's the concept, that's the rules. What happens every 10 minutes, how those are released, and how that algorithm works is incredibly complicated. Again, I think of it as a sort of lottery, and the more guesses you take, the better chance you have of winning. The one thing, I'm not sure if I mentioned this, but the reason this is not totally useless energy expended is because in doing that lottery and trying to win the lottery, what you're doing is recording transactions. So you're serving as an accountant for the network. And so you have all these people competing to be accountants, faster accountants for the network. You're recording the new transactions as they come in. You're saying, oh, he moved money over here, she moved money over here. And so that's what they're doing as they compete, is they're updating the records. But that's where it gets particularly complicated, exactly how that works. And it's sort of why computer scientists love this system so much, because it involves all this complicated cryptography and math. But that's how it works, or that's a close enough approximation of how it works.
So who gets the transaction fees, and how does that all work?
Right. So you want to be included. This is actually a good follow-on from that question. I just said that the miners are compiling a list of all the new transactions. They're serving as accountants for the network. And so when you make a transaction like this, you actually send it out to the network, to all the miners, and say, include me on your next list of transactions. And the miners can do that. And up till now, generally they've included everything that's come in. Now enough transactions are coming in that they can't include all the new transactions. And so you incent them. You say, oh, I'll pay you 0.0001 Bitcoins if you include me on your list right now, because I want this transaction done right now. And so you see these fees popping up. I don't know what that is. It's been around maybe 2 cents to get a transaction to go through now.
So do you know how many Bitcoins the creator owns? Did he release to himself a lot?
Well, he didn't release to himself a lot, but he was essentially one of 5 people using the network during the first year. And so he had the same odds that everybody else did. And you can look at the math. I think there's been no question that he didn't give himself an advantage. And he didn't want to, because he wanted the system to survive. He wanted people to trust it. So he tried to create the image of trustworthiness and that everybody's equal, including himself. He put a lot of computing power online in the first year because he wanted the system to work. And in putting a lot of computing power, he collected a lot of Bitcoins. And Satoshi never released the number that he collected. There are computer scientists who've gone back and looked at the patterns in which coins were generated that first year and determined which ones went to Satoshi. And it's estimated that it was something like 1 million coins were collected by Satoshi, in large part because nobody else was there. And those coins today, $240 million, $250 million. You can see those coins. None of them have ever been spent, and people watch them very closely because if they're ever spent, it's obviously a kind of would be a blow to confidence. Why is Satoshi selling? Is Satoshi doubt the system? And so those coins are still sitting there, untouched, just as they were that first year.
And our final question: why can't Bitcoin operate as a parallel currency, like the pound, the euro, or the peso?
Well, that's what it is. That's what it is today. And the problem is that much fewer people take Bitcoins than take the euro or the ruble. And because of the volatility of the price, it's hard to price things in terms of Bitcoin. So it is currently a parallel currency. And yeah, obviously, there is the vision of it as a global currency. There are others who think it will be something like gold, where the price goes up and down and nobody denominates goods in terms of gold, but it's a place you can store assets in the meantime. Maybe it's a little more accessible than gold. You don't have to actually get possession of gold bars. You don't have to pay somebody to store the gold bars for you. So that's I think that's sort of where we are essentially now. I think in some ways the term virtual currency is misleading because it's not, I've said again and again, it's not necessarily, it's many things. And actually the thing it is most right now is, the top of that list is probably not currency. It's maybe a digital commodity, a digital asset, again, a network. I think that virtual currency gets a lot of people confused because they're inevitably thinking, okay, how is it like the dollar or not like the dollar? That's probably not the best comparison, at least for now.
Nathaniel Popper, New York Times reporter and author of Digital Gold, Bitcoin and the Inside Story of the Misfits and Millionaires Trying to Reinvent Money. Our thanks to the Museum of American Finance in Wall Street, New York, our hosts for tonight's talk. And that's Big Ideas for today. Tomorrow we'll take a look at Australia's watchdog agencies. What's their role and how do they ensure integrity, ethical standards and honest behaviour? Until then, I'm Paul Barclay. Bye for now.
In order to progress, we sometimes need to shake things up a bit. So on Future Tense, we meet several people who question some of the orthodoxies of modern life. Fred Pearce argues invasive species are an environmental blessing, not a curse, while Chris Wilde says time is a remix of past events, not a linear progression. Challenging assumptions, that's Future Tense. Download the program from the RN website, find us via the ABC Radio app, or look for us on iTunes.